humans love sex and leverage like nothing else. It's kind of what drives them. And I think the leverage is all about sex. Look how rich I am. Look how big my bags are. It's ridiculous. It's ridiculous. And I keep saying to people, don't fuck this up. And leverage is the classic way to back it up. If you think about Solana, it's had a peak to trough 36% pullback. Now, even if you were mild 3 times leverage and the general degens are much more than 3 times levered, you get wiped out. It's like, stop doing that, please. Just stick with the program. In what world does Solana go up 10x in a year and you don't think there's enough juicy price action for you that you simply must leverage it? I mean, what world is that?
Raoul Pal discusses the reasons behind the recent crypto market dump. He attributed the sharp decline primarily to excessive leverage in the market, emphasizing the risks associated with such high leverage, especially in volatile markets like crypto. He also addressed the rumor about the potential rejection of a Bitcoin spot ETF by the SEC, which was speculated to be due to the Commission's current composition of Democratic members. According to Pal, this rumor was not the main driver of the market movement, but rather a catalyst that triggered a sell-off in an already over-leveraged market. Pal noted that the crypto market is dominated by short-term traders with substantial capital, rather than large institutions or hedge funds. These traders often exploit situations of high leverage to profit from market movements. He compares this to classic market maker actions seen in traditional financial markets. Reflecting on the history of Bitcoin's bull markets, Pal points out that significant pullbacks are normal. He cites numerous instances of 20% or more corrections in past bull markets, emphasizing that such volatility is to be expected in the crypto market. Let's now get into the video, as Raoul Pal sheds more light on the recent liquidations, the future of the ETF approval, and what we may see in the broader macro sense. As you watch, don't forget to hit that like button, subscribe, and drop your comments below.
There are a lot of short-term traders in this space with a lot of capital, right? The main institutional capital in this space is actually trading firms. There's very few hedge funds, and there's very few big institutions. So these guys see that massive buildup in leverage, they wait for something, and then they press it and everyone gets liquidated and they make a ton of money from it. It's classic kind of market maker price action. It would have happened on the New York Stock Exchange floor, happens in the futures exchanges, it happens always. But the one thing, just before I came on today, I went back and looked at the 2015 to 18 bull market. We had 11 20% pullbacks or more. Many of them were 35, 38%. In the last cycle, from the 2020 low, not even the 2019 low, from the 2020 low, we had 8 corrections over 15%. Some happened in a day and some happened over 3 weeks. So it's normal. Another mantra that I have when you're in the middle of a bull market that has the macro behind it is it's all fucking noise. It's just noise. And so, has the main thesis changed? Is the world becoming less digital or more digital every day? More. Are investors who aren't exposed to it getting more interested in it? Yes. Is there capital flow coming in? Yes. Is the business cycle supportive? Are liquidity conditions supportive? Yes. In which everything else is noise. So it doesn't change anything. It actually gives it a higher probability of rising. And it gives it a higher probability of rising because you flushed out the leverage. I've always said it's a function of price. So if price, last year was the best advert you wanted for an ETF to launch. If you'd have launched the ETF in November 2022, you'd have raised $30 million and everyone would have been embarrassed.
Yeah, like the futures.
You raise it after Bitcoin's done 150% last year. That's pretty interesting to people. Are the institutions going to use the ETF? Mostly not. It's mostly the RIAs. It's really for individual investors. So those pools of capital and the individuals, it makes it just super easy because they can just use their brokerage app or they can use their RIA because then they can get fees on top. So they're incentivized to do it. Will some pension funds do it? Yes, but they still really don't know how to deal with this asset class yet. And they want more regulatory clarity. I mean, it helps with an ETF. So we will see it. One of the headlines that will come across the tape in 2024 is some monster pension fund has taken a monster-sized position in Bitcoin. It's not just Bill Miller and Texas teachers. It'll be a bunch of others. We will see those headlines. They will be the pioneers to show the way to others that you could do it, much like Paul Tudor Jones was a pioneer in getting the hedge funds to start trading it, because he was pretty early into getting on board with it.
Raoul Pal further reviews his perspective on other cryptocurrencies and the potential future movements in the market. Pal reiterates his bullish stance on Solana, which remains his primary focus, followed by Ethereum. He anticipates that Ethereum will experience significant growth, especially after the Bitcoin ETF news settles. The topic psychology of market cycles was also touched on, with Pal outlining the typical progression from Bitcoin to DeFi season, then to alt season, and eventually to phases like NFT and Dogecoin madness. He emphasizes that these cycles are driven by investor psychology and the search for higher gains, and he expects these patterns to continue in the future. Let us now get back to the video.
My thesis remains unchanged. So I'm mainly denominated in Solana. Second is ETH. And like you, I think ETH has a big catch up as soon as this ETF is done. So that pause after the ETF is announced is, I think, the start of the ETH run. Because it's very simple. Let's say $1 billion of speculative capital went in to speculating on the Bitcoin ETF. Okay, once that news is out, you'll sell. Then what do? Oh, the ETH ETF, well, that's going to come by maybe June. So in which case that $1 billion goes into ETH. Now, what's interesting about ETH is it's a third of the size of Bitcoin currently. So if you put the same $1 billion into an asset that's a third of the size, it probably goes 3x more than Bitcoin did. And, ETH with the deflationary asset, the more activity, the less ETH there is around, and all of the staking means there's not a lot of liquid ETH around if this happens. So it could get very, very squeezy. So yeah, I think that. And maybe at some point it'll play a bit of catch up to Solana. I think Solana beats it all cycle, but there'll be legs when ETH does really well, much like Bitcoin started off out of the gates faster than anything. Then Solana caught up and exceeded it. I think ETH's chance is next. 60% chance it's a regular cycle, somewhat like the last cycle, but maybe a bit more like the previous cycle, that 2017. That got a little bit crazy. I think there's a 20% chance that maybe it all gets front loaded because we get all of the retail demand via the ETF, and it actually is a shorter cycle than expected. If you think the previous cycle was actually a bit stunted versus where people's expectations were, maybe this is stunted in terms of time. The other outcome I've got, the other 20% chance, is that this is a gigantic bubble cycle, somewhere between the 2012-13 version and the 2015, because everybody can now participate and total fucking madness ensues. And I don't know which one of those three it's going to be, but they've all got a decent chance. Everybody was a little bit shocked that we didn't have a final leg last time around. So they now got that imprint, like they've all been waiting for the down 50% leg, the COVID leg, which is not going to happen again. So they're now all expecting that it to be a smaller cycle. And I always look for where can the crowd be wrong, but still be right, which is like it's going up, but it goes up more.
Crypto investment services provider Matrixport expects the U.S. Securities and Exchange Commission, SEC, to reject all applications to list a spot Bitcoin exchange-traded fund, ETF, this month. The current 5-person voting commissioner's leadership critical for the ETF approval of the SEC is dominated by Democrats, wrote the firm in a note on Wednesday. SEC Chair Gensler is not embracing crypto in the U.S., and it might even be a very long shot to expect that he would vote to approve Bitcoin spot ETFs. An ETF would certainly enable crypto overall to take off, and based on Gensler's comments in December 2023, he still sees this industry in need of more stringent compliance, Matrixport continued. From a political perspective, there is no reason to approve a Bitcoin spot ETF that would legitimize Bitcoin as an alternative store of value. The widely anticipated approval of a spot Bitcoin ETF in the U.S. helped drive Bitcoin to prices not seen since April 2022 as it closed 2023, up nearly 160% on the year. Matrixport estimates that of the extra $14 billion of fiat and leverage deployed into crypto since September, $10 billion might be related to ETF expectations. Galaxy Digital Head of Research Alex Thorne took serious issue with the Matrixport report, calling it bewildering and nonsensical. Galaxy, in partnership with Invesco, is among the more than a dozen firms who have applications with the SEC for a spot Bitcoin ETF, Goldman Sachs, the high-profile Wall Street investment bank, looks likely to play a key role in the Bitcoin ETFs that BlackRock and Grayscale want to introduce in the US, according to two people familiar with the situation. The company is in talks to be an authorized participant, or AP, for the exchange-traded funds, according to the people, who requested anonymity. That's one of the most important jobs in the multi-trillion-dollar ETF industry, a role that involves creating and redeeming ETF shares to ensure the products trade in lockstep with their underlying assets. Goldman Sachs would join other finance giants in taking on that role. Last week, it was announced that JPMorgan Chase, Jane Street, and Cantor Fitzgerald would take on the AP job for some of the dozen or so companies seeking the Securities and Exchange Commission's permission to offer Bitcoin ETFs in the US. Big US banks, who have traditionally avoided dealing with cryptocurrencies directly, have been invited to join the hotly anticipated Bitcoin ETF party thanks to the adoption of a cash-based mechanism for handling the Bitcoin backing the shares, which is seen as a necessary part of winning SEC approval. What are your thoughts on Raoul Pal's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.